Well, friends, today we're talking about bonds.
James Bond.
The investment option that might not be as exciting as 007, but can still pack a punch for your portfolio. In this video, I'll be discussing how bonds can be used by investors, the different types of bonds, the history of how bonds came about, and the legend of the Bond King. Let's get started. A bond is a debt security in which an investor loans money to an entity, such as a corporation or government, in exchange for interest payments and the return of principal at maturity. So if you buy a bond, you're like a lender, and the company or government that sold the bond is the borrower. Just like when you borrow money from a bank, the borrower has to pay the lender back the money they borrowed, plus extra money called interest. So not exactly as thrilling as fighting off bad guys and seducing women, but still an important financial tool for any investor. Bonds can be used as a way to diversify an investment portfolio. By including both stocks and bonds in a portfolio, investors can potentially reduce the overall risk of the portfolio. This is because the prices of stocks and bonds often move in opposite directions. So when the price of stocks is going down, the price of bonds may be going up. In addition to diversification, bonds can be also used to generate income. Many bonds pay out interest to investors on a regular basis, which can be a source of steady income for investors. This can be especially appealing for investors who are retired or are nearing retirement and are looking for a dependable source of income. The history of financial bonds dates back to ancient times, making them a tried and true investment option. In fact, the first recorded use of bonds was in ancient Mesopotamia, where they were first used as a way for individuals to lend money to the government in exchange for payment of interest and the return of principal at a later date, i.e., bonds. Over the centuries, the use of bonds has evolved and they've become an integral part of the global financial system. During the Renaissance, the Italian city-states of Genoa and Venice began issuing bonds as a way to fund wars and other government projects. The Dutch, who were major players in the bond market at the time, even used bonds as a form of currency. In the modern era, bonds have played a significant role in financing some of the world's most iconic projects. For example, the construction of the Transcontinental Railroad in the United States was financed through the use of bonds. In more recent history, bonds have been used to fund everything from the construction of the Sydney Opera House to the rebuilding of the World Trade Center after the 9/11 attacks. So not only are bonds a reliable investment option, they've also played a crucial role in shaping the world as we know it today. Investing in bonds can not only potentially increase your wealth, but also allow you to be a part of history in the making. There are a wide variety of bonds, including government, corporate, municipal, treasury, and zero coupon. A common difference amongst these varieties is the entity issuing the bond. When it comes to increasing wealth, financial bonds can be a powerful tool in any investor's arsenal. But how exactly do they do that? One way that bonds increase wealth is through the income they generate through regular interest payments. Depending on the type of bond and the current market conditions, these interest payments can be substantial and provide a steady stream of income for investors. But bonds can also increase wealth in the long term. As the bond approaches its maturity date, the price of the bond may go up in the market. This is especially true for bonds with longer maturity dates, as they have more time to potentially increase in value. So while you may not get rich quick with bonds, they can be a great way to steadily grow wealth over time. While it may not be as flashy as investing in stocks or real estate, investing in financial bonds has helped many investors achieve financial success. One notable example is Bill Gross, who is widely regarded as one of the most successful bond investors of all time. Gross co-founded the investment firm PIMCO and served as its chief investment officer for many years. During his tenure, he built PIMCO into one of the largest and most successful bond investment firms in the world. Gross's success in the bond market earned him the nickname the Bond King. Gross's success in the bond market also earned him a fortune and cemented his place as a legend in the world of investing. So while investing in bonds may not be as glamorous as other investment options, it can still be lucrative and a worthwhile choice for those willing to put in the work and make smart, calculated decisions. As always, it's important to do your own research and consider your investment goals and risk tolerances before making any financial decision. Thanks for watching, and I'll see you in the next one.